Hey everybody, today we're going to do something a little bit different, but kind of the same. The elephant in the room. Yes, Bank of Canada announced a rate hike today as of September 7th. We're going to talk about that. We're also going to do a month in review for August and the number of sales in Toronto. Some surprises in there, but really we're going to focus in on that rate hike and what it means and how you can take advantage of it or what you need to do if you're a seller or a buyer right after this intro. Yes, rate hike today. It's rate hike day along with the Apple event today. All sorts of fun stuff in the news. And if you're on Twitter, and most of you are, because that's how you're reaching out to me, you're seeing stuff on Twitter and you want my comment on it, please reach out to me. Many of you have, because there's a lot of uncertainty in our market, whether you're a real estate investor, whether you're a buyer or a seller or a realtor. I work with many realtors. So please reach out to me if you're a realtor as well, and looking for some insight. And I love sharing back and forth. I love learning how other awesome realtors are coping in this environment and learning and growing as well. Because here's what I know, in an up and down market like this, there's some tremendous things. And after every time a market comes or drives up, we see a lot of new people come to the forefront, and perhaps a lot of new people get licensed as a realtor. And as the market comes back down, we see as much as 30, 40, sometimes even 50% of those agents leave the business, because it is entirely an incredibly can be a difficult business to in, especially if you're a real estate investor as well. You're trying to, you think you're timing the market, but remember, the best time in the market is time in the market, right? And that's how I feel real estate is best observed. And you're going to see lots of videos and news articles and tweets and posts and everything else coming out at you over the next several days, because many are going to talk about, yeah, we're going to see another rate hike. And what is that going to do to our real estate market here in Canada? Toronto, Vancouver, the two biggest markets. And what's the ripple effect mean? So as the Toronto and Vancouver market move, you might be in a small market 3-4 hours away, or perhaps even in a different province. It affects you. It's the ripple effect. And we're going to talk about locally here, the Toronto market, and what's happened. And we're going to see some numbers come out at you. And then we'll wrap it up with what I think this interest rate hike is going to do, and some information behind that. So let's share my screen. Yeah, here we go. There we go. That's what we're looking for. Reach out to me. Thank you for reaching out to me, because I know many of you have, even since our last video, continue to do that. And I love answering questions about the market and what's happening in here. So here's what we got here. I'm gonna make some notes on the screen, as I always do. And this isn't a week recap, as I tend to like to do. This is the month of August. Now that we have a whole month wrapped up here, let's do that. And this is based on the month of 2021, the month of 2021. Hello, Gare. August 2021 versus August 2022. And you can see the differences right here. We're going to dive into some of these a little bit. New listings are down almost 7%. Average list price is up 11.3%. But is it? We're going to talk about that, because we're going to talk about that. Trust me. Sold properties. Yeah. Well, if the listings are down, definitely the sold properties are down. The sold properties are down quite a bit here, actually, which is incredible, down 39%. What does that mean? Is there a lot less people listing? That could be it too, right? Average sale price is up marginally, and days on market, well, we're going to see that up, and the average ask to sell ratio is down a little bit. We're going to figure out what that means too. So let's look at new listings. Well, if you've been following along here, folks, you know that we've been talking about new listings and being down versus last year. So a slight change there, -6%. And we do have, a lot less people bringing their homes to market compared to the best year we've ever had on the Toronto Real Estate Board, 2021. So always keep that in mind, right? And there's the months to date. Over the last several months, we've seen that number drop. And as it always does in August, it always drops. And we see a surge mid-September, late September into October. So we're going to see, if you're following along and watching the videos, we're definitely going to see over the next couple of weeks, kind of just maybe we just hover. Okay. And then we're going to start seeing some upticks in new listings, but there's your information there. And then year to date, well, of course, we've been down month over month. We're going to see some year-to-date numbers change right in here, right? And that just makes sense. That follows along with the script, if you will, of some of the information that we get. And I should mention, this report is always available for download. Just click on the link in the video description, and you can download this report and have it for yourself. Share it with fellow investors or your clients even. And if you're an end user, we love you. Use it and educate yourself on it. Average asking price. So this is the price that we as realtors list homes for. And what is that? Where's that number coming out at? Well, we've been talking about year over year. It's been going, that is supposed to be an arrow. There you go. It's been going up, and we're going to see that cross, those two lines cross here. I truly do believe kind of late September, we're going to see that line cross where the average price was higher last year than it is this year. Currently, it's higher than it was last year, only by $10,000, $11,000, right? And that's where it is. So we are getting really, really close to what that looks like. Average price year to date, well, you can see the numbers there again, following the scripts, right? And since January of 20, that price has definitely worked its way up. So we'll see where we're going to hit and land here in the month of September with the new, obviously, interest rate hike. So we'll see what that looks like. Sold properties. This is the big one. Year over year, this is down 40%. So again, what does that mean? Are a lot less properties coming to market? Well, we're going to look at some of those numbers and figure that out. And of course, there's a lot less buyers. I said it in all my other videos. This was truly the first summer in about the last 2+ years that anyone has really had the opportunity or felt comfortable and wanted to go travel. So there was a lot of extra travel this year over the summer. And that's one of the main reasons I feel that we saw sales dip the way that they dipped. It's definitely in the middle of July, August, and that crept into August. Sold properties year to date. Well, you can see we're down here. We're at 22,000 for Toronto. Now, if you took on the entire Toronto Real Estate Board, ask me those questions. If you want to see the entire Toronto Real Estate Board, I'll pull out some of those numbers. Remember last year we had the best year ever, and we were over 120,000 units sold. I'm kind of averaging out, we're going to be at about 80,000. That's kind of my prediction, but we'll see here as the months roll off. Average sale price. Well, here's our average sale price. We are bang on what we were last year, right? That's supposed to be a line, and I don't know what that was. Bang on where we were last year. So again, we're seeing some slight change, and this is for the month of August. And if you looked on the weekly date, especially the last week of August and into the first week of September, while summer vacation was still around, we saw prices definitely increase versus the first week of August, and we saw some multiple offers coming to fruition as well. So that was really interesting. If you were in the market here in Toronto and Durham region, York region, Mississauga, Brampton, Peel, all of those areas, we certainly saw some very aggressive buyers towards the end of the month. And I think that was all in preparation because they knew that the new rate hike was coming. Perhaps their locked-in rate was expiring and they wanted to get into the market beforehand and so forth. Average sale price year to date. Well, you can see that number year to date versus last year. It's going to be up ever so slightly. However, trust me, it's coming. That line, that cross is coming. It's coming for sure. Days on market is definitely increasing for sure. That's going up. And I'm going to talk about this when we talk about the rate increase, but that is definitely something that we are going to have to get accustomed to because we've been so lucky at seeing, 7-10 days on market in Toronto, and we're going to definitely see that go up over the next several months. Year to date, it's kind of hovering where it was last year, but trust me, you can see here over the last over the last, down in here, you can see that moving up for sure. Average ask to sell ratio. Well, this comes down to the seller and the listing agent, their selling strategy, their marketing strategy of how they list properties. And they are listing properties. We are listing properties at what we feel is, and after doing all the research and having, the information right there in front of us, at fair market value. And that's why we're seeing fair market value, that number come in at 98, 99% of the asking price. Again, that means you list for $1 million, you're bound to sell for $987,000. That's what this is telling us right here. So fair market value. And I can tell you, even when from a marketing strategy or selling strategy, I was involved in multiple offers the other day. I was the buying agent this time round, and there was a handful of other offers. And we chose to submit our offer. We were then asked to improve our offer if we could. We decided to take that opportunity and improve our offer, and we did on a couple of fronts. And where we improved it was with our valuation. We came in under asking, and then we offered the asking price on this particular property. Very beautiful home. And the asking price got the home. So we didn't have to go way above or something crazy. We offered at fair market value after doing our research. The buyers agreed that yes, this was the price, that if they were not able to get the property, they were still happy in submitting that offer. And yet, lo and behold, at asking price, we got the offer. So what does that tell us? That tells us that we have very educated buyers on our hands, but we also have buyers that are willing to look at offers in any form and fashion, which is good for the market. We need to have these properties moving for sure. For sure. Okay, so let's talk about, again, you can always download this report here. Do that at any time, and the link is down in the description below. So here's what I'm going to share. I'm going to share a couple of things, and we're going to share a little history on the prime rate. So yes, prime rate went up 0.75 basis points. So what does that mean? Well, it means our rates are going up. So let's look at what's happened over the last 3-4 months. In fact, let's look back. Let's look back over the last, just to figure out what's going on in the current market. How many homes were listed? How many solds were there? And days on market. And this is where we're at this present moment. So the green is number of listings in Toronto. The red is the number of homes that have actually sold. And then the dotted line is days on market. So you can see here, end of July, middle of August, that was the longest time, excuse me. And then as we kind of trailed out, we're hovering at about 25 days. And now that we've had our interest rate hike, we're going to see that increase 100%. I should rephrase that, because 100% means that's going up to 50 days. We could see that number double, but I'm gonna suggest we land in around 40-45 days on market, which is to say, if nothing else came on market, it would take 45 days for all of the inventory to sell out. Typically what that means. And of course, our red is the number of sales here. So you can see that really tail off, and it always does in end of the summer holidays, the school summer holidays. It always does. And that shouldn't be nothing new. We should be used to that, right? And mid-September, we see that little September bump of new listings and buyers. And I know a lot of agents are working hard right now to get new homes prepared to bring them to market. And they are going to bring them to market. That's just what happens every mid-September. So we're going to see a surge in new listings. And historically, we always see a surge in new buyers. So Garrett, the interest rates just went up. What does that mean? That means I think what we're going to see is a slight devaluation in the homes because of interest rates. That means everything's more expensive, right? When you go to borrow money, it's more expensive. Yet the number of new listings that are coming on and the number of buyers, that's going to help. Just kind of, instead of it just dropping off the cliff, that's just going to help it kind of hit that soft landing again. So we're probably going to see about another 3% to 5%, just kind of soften a little bit of the valuations in the GTA is where I see it, because of that surge of buyers they come to market every year. And trust me, you might think, well, I don't need to sell. I'm not that person. You're right. But jobs, Lives change constantly. People move because their job is being relocated somewhere. Family things happen, right? And you need to sell for different reasons, or family growth happens and you need a bigger house for a different reason, because everything, trust me, people will buy and sell even in crazy markets where it's going up like this and down like that for other than financial reasons. And that's going to happen here too. Okay, so let's look at the history of the prime rate. Right. So this is going back to 1940. And here we go. I'm sharing my screen there. You see it. 1940. So we were at, 5%, 5.5%. And then in the mid 80s, we all know what happened in the mid 80s. Everyone talks about it, paying over 20% interest rate. And then in the mid 90s, early 90s, I should say, we're at 14.25% interest rate. And then in 2008, which what most people remember nowadays, right? We were hovering at 5.75, and then it drops. And then right now in 2017, you can see it started creeping up in 2018 when we had another big surge in the real estate market here at 3.5, 3.4, got up, didn't quite eclipse 4%, but at 3.95. And then of course now we are at 4.7%. And it's slightly higher because this doesn't have the most recent prime rate on it, which is going to be at, five and change there. So what does that mean? What's going on? Here's what I see. And in fact, I'm going to share my screen. I did some other homework here, and let's see if I can share another screen for you, and we'll do it like this. Okay. I know you can't see those numbers, but trust me. So this goes back to 2015, and that interest rate held for 0.75 for a number of months into 2017. That market started to climb on us. It was climbing and climbing. We had some crazy sales in 2017, and in 2018 or mid 2017, it halted. Right, the government came in and made some changes, and what did they do? They started increasing interest rates to help with inflation and so forth, right? And then it held. This is 2020, right here before it dropped, and it dropped for various reasons. Obviously COVID and trying to create buyer confidence in not in just in real estate, but in everything, right? And then they held it. Another surge in, call it our real estate market, and it shoots up again, and they want to kind of substantiate that and hold it off and bring down the real estate market. And here's what history's telling me, especially as I kind of flip back and I look at this other chart. If I go back to this chart here, every time there's a big surge in the real estate market and they have to control inflation, they increase rates, then they stop. And then what happens the moment that it stops, right? They start bringing down that interest rate again. And that's what we need to be mindful of. The big picture is we are in a market right now where the interest rates are definitely having an effect on the real estate market. It's having an effect on consumer confidence, whether it's inside or outside of real estate. Yet, if you can weather the storm and be in real estate for the long term, good things are going to happen. Right now, it's a little rough. I get it. It's a little rough. And I'm always the guy that says the glass is half full. Policy interest rate got increased. We're at 3.25 today. I love this. This is right off the Bank of Canada's website. We are Canada's central bank. We work to preserve the value of money by keeping inflation low and stable. Yeah, we might have all our own jokes around that. And what are they trying to do? Well, they have no idea. Well, trust me. Obviously, they're doing the best that they can with the tools that they have in front of them. And here's what I do know. We are in Canada. Canada is a great country to be in, has tremendous amount of natural resources, has a tremendous amount of intellectual resources. We will be okay. We just need to weather this storm a little bit. Is there going to be opportunities with this new interest rate hike? If you're a buyer, there always is. There will always be buyer opportunities, and there will be people that will come to the market because of financial reasons, meaning they have to sell and so forth. Perhaps their debt is now has increased so much, not their debt, the amount of debt, but the interest that they're paying on. Perhaps they can't keep up. Real estate is all about providing solutions. So if you're a buyer or a seller out there, look to provide the appropriate solution. that's what this video is all about, is understanding and being educated. And remember, when we come in, we want to invest in the real estate market, it's better to be investing in the market than looking upon the market or looking on the market. We always say, and we always mention things like that, especially when we're listing properties, and perhaps the seller has a different opinion of value. And one of the lines that I always say is, we want to value, we want to price this home so we're not on the market. We want to be in the market. And especially with valuations, at a very uncertain time right now, and with buyers perhaps a little confused and sellers perhaps a little confused at this moment, we need to be pricing ahead of the market, right? And that's important. And ahead of the market might mean, if you thought your valuation was $1 million, perhaps we're valuing it at maybe 950 or 925. So we are ahead of that market, because you want your home sold and you don't want it sitting there for days and days and days on market. Anyways, that's the recap of August. Lots of crazy things happening right now. And do reach out to me, as many of you have. And one of the cool things that I'm doing is hosting a podcast. And I'd love for you to tune into that. I know I just talked about creative financing, so you can certainly go watch that podcast. It's only, they're 10, 12 minutes long, and that's a really, really insightful way to look at creative financing. And I'm going to talk a little bit more about creative financing opportunities and second mortgages, so forth. So you can certainly check out that video and provide some feedback. And if there's a question or there's a story you want me to share, or something insightful that you had happened to you, put it in the comments below, and we'll see everybody on that podcast video. Bye for now.